So like, I don't want to own another rental. And all the door stackers out there are like, oh, this guy. I'm like, no, trust me, dude, I don't want to own another rental. It takes me longer to accumulate rentals than it does notes. Notes are an easier sell to a private lender because they're in a far safer, secure position than they are funding someone's, next rental or house flip.
Right.
The real estate market crashes and now people are upside down in their flips, and upside down, they owe the bank more than they're collecting. It's just like the market has to crash 30-40% to destroy people again in the game.
Hey, welcome back to the Prop First REI podcast. We have Patrick Franz here today. I'm super excited because he is a note investor, but he runs the Note Investor. I think it's Note Investor University, right? And like you have a school and you teach people, and you're out there helping a lot of people that are in the real estate world really open their mind to this other part of the real estate world. So I'm super excited about this today and learning myself and then being able to dig in and ask questions. So thanks for being on the podcast.
Thank you. I know we had you on our mastermind call and such too. You were able to provide some value to our group, so you're great. And then you said, hey, why don't you come and provide some value to my audience? I said, definitely. And yeah, the Note Investor University obviously is pretty self-explanatory. It's a university where you can enroll as a student and learn how to be a professional note investor. But we sort of giggled about it before we started the show, and it's like, well, there could be a lot of savvy people. And I'm not saying that you're not savvy. There's savvy people out there, even savvy real estate investors out there, that still yet today don't even know that you can own someone's mortgage versus, say, owning another rental property. It's just a different way to think. It's getting in the money business, getting yourself on the bank's side of the fence versus the active real estate investor that we all strive to be.
Well, let's just do it. Let's just talk to me like I don't know what you're talking about. So let's go into it. And then how do I buy a note? Like, okay, I hear note investing a lot. And obviously, from what I just heard from there, it sounds like you're more the bank and you own that note now. But like, okay, let's just say I'm a fix and flipper or a landlord and I've dealt with houses the whole time. How do I go about looking for a seller, and then I buy it from a seller, just like I've got a CRM full of leads, or like, what do I do in order, like, who am I looking for?
Well, no, it's not real estate, right? And so it's just like sort of saying, if you were going to buy stocks in the stock market, would you go to your current sources in which you work with in your real estate business? And you'd say, well, no, it's a totally different marketplace. Doesn't go together. So same thing, mortgage notes, which, folks, is just a promissory note. That's what we mean by note. It's a promissory note. Promissory note is a written IOU. It spells out the terms of how borrowed money is going to be paid back to the lender. It's a promissory note.
Where would a real estate investor have encountered a note up to this point? Like in the deal, because I'm sure they would.
They pay one. Right? Like, so here's the interesting, funny part of it that we like to talk about. Is that there's usually two forms of cash flow being spit off of a rental property. And people don't think of it this way, right? Mm-hmm. We're used to being the landlord.
Right.
Landlord, we collect rent from the tenant. We have to deal with the terrible T's that come along with landlording. So the toilets and the tenants and the termites and the trash outs and all those things that you have to deal with as a landlord, right? And all the liability that goes along with ownership of that property and so forth. So here's a landlord with all that on their plate. And they're collecting rent every month from a tenant. Most likely because most real estate investors that I know are leveraging into rentals, right? They don't have $487,000 cash to go buy their next rental. They're usually leveraging and getting like a bank loan, or they have a lender that they owe money to because they borrowed money to buy the rental, right? And so here comes the piece of cash flow that gets spat off from the tenant to the landlord. And then immediately the landlord turns right around and then spits out most of that cash flow out to his lender because they collect the mortgage payment on that property. So what I mean to sort of get people's mind open to is, who has it better in that scenario right there that I explained? The landlord with all the headaches of being a landlord and management of the property and liability of the property, dealing with the tenants and the trash outs and the leaky toilets and the calls, and then they're collecting this rent. And let's just say the rent payment they're collecting is, $2,000 per month. They're collecting place rents out for $2,000 a month. You always hear that, right? I'm renting that place out for $2,000 a month. Well, how much of that does the landlord turn around then and send off to his lender to pay the mortgage payment on that place? Is it $1,600? So here he collects $2,000 in rent, and he sends $1,600 a month off to his lender, and he's trying to make that $400 a month cash flow, and that would be a successful rental property, right? Be like, dude, I'm cash flowing, right? I'm cash flowing. Well, think about the lender in that situation that did nothing, had no liability or property ownership, didn't have to get a call about a leaky toilet or manage a tenant or any of that. But they just collected $1,600 payment, passive cash flow off of that piece of real estate without having to act as a landlord. So being the bank or being the lender versus being the real estate investor has some obvious advantages, especially if you're looking for a passive lifestyle.
Yeah.
Yeah.
That makes sense. So then okay, let's say they want to jump to that side, is that, for a rental property, you can use leverage. You can use that bank money, to go and buy something that you couldn't be able to afford with 160. Do you have to have the 160, like, to go buy that in that scenario? If you're going to go buy that note, like, do you have to have the cash? Is it almost like I've got the cash to be able to now be able to buy the notes and become the lender?
Yeah, there's some extreme similarities there. It's not obviously an exact parallel, but there's some extreme similarities there. Obviously, if a real estate investor has enough of their own cash on hand, they can go out and buy a property cash. And then 100% of that rent is pure cash flow for them, and they don't have to send any of it off to a lender, and hallelujah. Now, most real estate investors don't have enough of their own cash to go buy a whole bunch of rental properties. So what do? They will generally go to a lender of some type. Sometimes it's a hard money lender. Sometimes it's a private lender. Sometimes it's a bank. Sometimes it's a whoever, right? But they'll go and say, listen, I'm buying these properties up, or I'm flipping these houses, or whatever your game is, but I need some money to scale my flip business or to scale my portfolio of rentals. I need to start leveraging and borrowing money from other people to do it. So not an exact parallel, but yes, if you have your own cash, can you go out there in the secondary mortgage market, find a note very easily to buy and buy it in cash? 100% you can. But recommended is to utilize your skills if you can learn the niche expertise of being a note investor, right? You become pretty valuable to people that have retirement accounts. You become pretty valuable to dentists, doctors, lawyers, and people that don't want to be pros in our industry, but like real estate investing because of the security and the cash flow that gets spat off of it. And that they get it, but they need an expert, right? It's like my dentist is not going to come flip a house with me. He's good at fixing my teeth, and I go to him for that. But sometimes he might invest money with me in a house flip, let's say, right?
Mm-hmm.
Okay, well, just think about it. A mortgage note is more secure than a house flip. It's more stable because it's a contractual rate of return. The fluctuation of the real estate market prices or stock market prices don't matter. And it does spit off the passive monthly cash flow by way of mortgage payment every month. So it's like, if I'm going to be a pro in this business and my plan is to scale my portfolio and acquire more and more and more notes, right? I obviously can do the same thing I would do in my real estate business, which is go out to private lenders, get them to loan me the money at a certain promised rate of return for them, right? Then I can go out and with my expertise buy mortgage notes that are double-digit yields. Our notes are providing 12, 13, 14, 15% annualized returns on the money. Of course, somebody with an IRA that's making 3.5% right now annually, and it's subject to the ups and downs of the stock market, managed by somebody else, of course, to provide that person a wonderful opportunity, like Zig Ziglar says, to help many people get what they want, you'll get what you want. So it's like, how can I help somebody else put their retirement on steroids using my expertise in the note investing industry, and also me benefit as well, so that it could be a win-win situation? Well, can you imagine my financial friend loaning me some money out of his self-directed IRA? That money was only earning 3% returns. Now he's earning, say, 8% returns. And it's not fluctuating, and it's not subject to losing half of his value in there when the stock market crashes or any of that. It's a contractual rate of return with monthly cash flow that goes back into his IRA, steadily growing his IRA at 8% per year without much worry, with double collateral and very passive, you see. Whereas then, if I pay the investor partner 8% and I have a note that I bought that's yielding, say, 13%, there's a spread there that becomes mine, right? And all the real estate investors are going, yeah, I get that.
Yeah.
Right? There's an arbitrage, there's a spread there. And so if a mortgage is spitting off $1,000 a month mortgage payment, and I need to pay my lender $700 of that every month, that means I get $300 a month. Now, I just wanted you guys to see that, now with skills and expertise and being in the note space, be on the bank side of the game and utilizing OPM, you're creating passive cash flow out of thin air. And when I say passive cash flow, I mean because owning someone's mortgage as the first lien lender creates a far more passive monthly cash flow situation than even being a landlord, right? Because can we agree people tend to pay their mortgages?
Yes, they tend.
There you have it. There you have it. And people may say, well, yeah, but how are you doing this? People's interest rates are 6%, 7%, 8% on their mortgage rates. What are you saying? You're getting all these great returns and stuff. Well, this is another cool thing, how we compare this a little bit to real estate and try to do some comparisons, right? In real estate, generally, when you buy a piece of real estate, you have to kind of wait and hope while you're waiting that it's in an upside market where the real estate is becoming more and more valuable. And you wait, and then you have what we call equity, right? You wait in real estate. If the price of the real estate goes up versus what you owe on it, you now have this equity, right?
Yeah.
Well, the coolest thing in note investing is when we buy promissory notes, when we invest in the underlying debt collateralized by that real estate, the debt is sold at a discount. And so this is the way we're getting these yields. And so let's say there's a balance, and just for easy numbers, let's say somebody owes $100,000 to the bank. They owe $100,000 and there's 20 years left until it's paid off. So that's the note, right? They owe $100,000, there's 20 years left, and then it's paid off. And if that's the case, I would probably pay $85,000 for that note cash. So it's what's cool if people don't understand what I'm saying is that there's instant equity in note investing. So the day I enter into the deal, I'm in for $85,000 as an investor. And now I'm owed $100,000 on paper. The balance that's owed by the borrower in that house doesn't change. They just get a transfer letter. And so people may have an aha moment here that have been, maybe this is blowing their mind a little bit, but if anybody's had a mortgage before and you've been on the borrower side of things paying a mortgage payment, right? More than likely, at least once, and I had talked to a lady the other day, she said, that's happened to me like 4 or 5 times since she's owned her house. But people, you get what's called a transfer letter, right?
Mm-hmm.
It's like maybe you had your mortgage with Wells Fargo, and all of a sudden you get a letter from Wells Fargo in the mail, and it says, hey, Wells Fargo no longer has your mortgage. We've transferred that over to Bank of America. So don't pay us anymore. And then you'll get a letter from Bank of America that says, hey, your mortgage was transferred from Wells Fargo over to us. And so don't pay your mortgage payment to them anymore. Now you got to pay it to us every month.
Yeah.
That was called a transfer of a mortgage, right?
Mm-hmm.
Really, then what it means, of course, is that one bank sold your mortgage to another bank.
Okay.
Okay. Nothing changed for you as a lender, like how much you owe, your term, your interest rate. Nothing changes for you. It's just that your debt traded hands, didn't it? Who you owe your mortgage debt to traded hands. It went from bank to bank. It's a transfer to a homeowner's perception because you get a letter of transfer. Your debt's been transferred hands. And that's true. But it just means that someone sold your mortgage to somebody else.
Yeah.
A new person has it now. Okay. So imagine then you, and people don't even know that this is possible, a lot of folks in your audience maybe, but you can step into the bank's shoes on the secondary mortgage market where mortgages are sold just like stocks are sold on the stock market. You wouldn't go to your real estate hookups and say, hey, where can you find me notes? It's not the same game. It's the banker's game. But notes are sold on the secondary market, just like stocks are sold on the stock market. You can buy notes up, okay? It's amazing. So if you buy these notes, you get the passive cash flow, the security of collateral, and you get all of that with a good yield. I'm talking double-digit yields here. And guess what, real estate investors? Sometimes people don't pay their mortgages. Isn't that right?
Yes.
And David, let me ask you a question. What happens to your house if you don't pay your mortgage?
Foreclosure.
And then who gets the house then?
The bank.
The bank, right?
Yeah.
Who would be me if I'm the note investor?
Yeah.
I have to do the shoes of the bank. They owe me the first lien mortgage debt. They owe me the mortgage balance. And so do people default? Yes. It's not even that common, actually. Most people pay their mortgages these days, even through COVID. I was surprised. But in default, I can do loan modifications, deed in lieu of foreclosures, cash for keys. Now I'm speaking real estate investor language to people. I can do all these things to try to be ethical and keep somebody in their home. Because look, note investing is about passive monthly cash flow. I want them living there, paying their mortgage payment on time every month. It makes my life real easy. Okay. I can go play golf. Okay.
Right.
But we have sometimes the ability, of course, to do a judicial foreclosure. That's what a bank can do. And whether it's cash for keys, deed in lieu, or judicial foreclosure, we oftentimes end up with owning real estate. Once you own that real estate, there's of course no debt because you are the lender.
Right.
Okay. So now you've taken back the collateral now for your note investment amount, which was far less than the retail value of the property that's acting as collateral. From your note investment amount, like let's say with the idea of that I was telling you earlier, where the debt was worth 100 grand, I was able to buy that note for 85,000. But in that scenario, the underlying real estate acting as collateral may be worth like 200,000. So
Right.
I'm in for 85 grand. And if I get a hold of the real estate, even through a judicial foreclosure at last resort, I now own a $200,000 piece of real estate that I backed into for 85,000.
Yeah.
Now, can I then, if I want to, turn that into a rental property if I like having rentals in my portfolio?
Yeah.
Yeah. I can also sell it via seller financing and be in the bank's mindset. So I can sell that property to somebody else for 200 grand, take
Right.
a nice 20% cash deposit, and then carry back the note again and
Yeah.
be in the banker's position without the liability of a landlord, but I can still turn that into a cash flowing asset for myself. You see what I
So,
mean?
so you said you find these on the secondary market, and this is in the banker space. So, like, if someone was going to look for these, would they hit up their banker, or like, what are the different avenues? And if that's the secret sauce, you don't have to get the secret sauce. But like, where do they go for this
Yeah, I
type of?
tell you, like it's I hate to blow people's minds, but it's not as difficult as that. Even there's paperstack.com, and I'll give my boys Brett Berkey and Rick shout out. Right, they run paperstack.com,
Yeah.
spelled with a C at the end. Right, you can go to paperstack.com. There's notes for sale. So it's not like it's hard to find the notes. You're not going
It,
to have to cold call banks and credit unions and go, hey, you got any notes available? That's not the hard part. The hard part usually is once somebody has the expertise in place and the
yeah.
confidence to start being a note investor and go at it. Of course, people run out of their own liquidity very quickly, David. That's the
Yeah.
biggest problem. And so learning the expertise, like we teach at Note Investor University, where you're learning where to source these notes, how to,
Yeah.
do the due diligence, acquire, asset management, exit, all that stuff. And you get that education and confidence. But then you're going to go out and start buying notes. And even if you have $200,000 in your account right now, and you're saying, I'm going to get into notes. Well, look, man, I could help you buy 4 notes at 50,000 bucks a piece, or 2 notes at 100K a piece, or 1 note at 200K. And either way, even 4 notes, 2 notes, 1, either way, that can happen very quickly. Your money is now deployed.
Yeah.
So now you have these great notes in your portfolio spitting off a lot of cash flow, but you don't have any more money. So how are you going to buy your 5th note?
Right.
Because you're in the game, right? And so the biggest thing we teach at the university is not only to learn how to be a pro and expert at this and get yourself in the game, but also how to learn how to raise private capital to continue to grow your real estate portfolio, and how to put raising private capital on automation with real systems in place.
Yeah.
Because that's one of the big things we harp on.
So you help that. Well, okay. What if you're speaking to a real estate investor who is savvy at already getting the private lenders in the door? So they've figured out the hard part. Are you just teaching them then of like, how do I actually analyze this note? Or like, how do I know if it's good or not? And what's performing versus non-performing, and like these types of things. Is that what you're teaching someone? Because I like what you just said there. I feel like that's like if someone comes off the street and they don't have real estate experience, or maybe just very little real estate experience, but someone who is in the trenches and has the private lenders, it's almost like, how do I talk to the private lenders now about owning this note? Because I want to go into notes versus owning the property. Is that right?
It's 100%. I mean, it's very spot on, right?
Yeah.
And guys, I'm saying notes, the paper side, the financing side, the debt side of real estate
Yeah.
is something that I decided to transition to fully. So like, I don't want to own another rental. And all the door stackers out there are like, oh, this guy. I'm like, no, trust me, dude. I don't want to own another rental. It takes me longer to accumulate rentals than it does notes. Notes are an easier sell to a private lender because they're in a far safer, secure position than they are funding someone's, next rental or house flip.
Right.
The real estate market crashes and now people are upside down in their flips, and upside down, they owe the bank more than they're collecting. It's just like the market has to crash 30-40% to destroy people again in the game.
Yeah.
So understand, by my investment to value ratio, if I bought a note for 85K and the house that's acting as my collateral is worth 200K in today's market, the real estate market could crash 50%. And the house that's my underlying collateral would be worth 100 grand, and I'm still only in it for 85.
Right.
So when you're looking at this, it's also easier to show the quick and easy numbers, which the calculator numbers don't lie, the reality don't lie, the security of this investment don't lie, the reliability of the monthly cash flow don't lie. and all that stuff. And then the three possible outcomes is they either pay you as agreed, they pay you off early, or they don't pay you. And when we are a note investor, if you learn the things we teach at the university about the due diligence process and how to price a note and what to look for and all that good stuff, is that you're obviously able to back into these investments. You're not only at a discount, you can use the other people's money because it's much easier to show a clear path to the private lender.
Yeah.
They have much better collateral. It's more secure. It's not subject to the ups and downs of the markets. It's like, so when you start to list all this stuff and you're like, okay, dude, what's the too good to be true part of it, right?
Mm-hmm.
And then I say, I thought the same thing. I'm like, I thought the same thing. Wait a minute, this has to be too good to be true. But listen, banks aren't stupid. Banks are pretty good at making money.
Right.
When banks created 30-year amortized mortgage lending, it was to create the American dream, or sold to us for that, right? Because now middle-class people can afford home ownership and all this stuff. But banks, if they're going to start lending money out in that manner and be paid their loan back over 30 years' time, okay, number one, the bank said, well, how do we make this a win-win situation? And they created amortization. Okay. Have you ever been paying your mortgage payment on time every month for 3, 4, 5 years to the bank? And you look at your mortgage statement and you're like, dude, I've paid $70,000 of mortgage payments. My balance went down $9,000.
Right. Yeah.
So think of all the mortgage payments in the beginning of a mortgage loan, or the mortgage payments are mostly all profit for the bank.
Yep.
So think of this. The bank creates something where they start collecting monthly cash flow, which is all profit. They have your home as collateral the entire time. So if you want to mess around and not pay them, okay. You see how the bank is sitting in a very powerful position, and the bank is very passive, and they don't have to worry about the landlord stuff. So it's like, I love spreading this message to people is because you could go crazy and get into it like full-time like me, because notes is awesome. And you can really build financial freedom very quickly. Really, honestly, if you need $5 or $6 a month coming in to quit your 9 to 5 or whatever, you can do that within 36 months time in this game. Okay. So financial freedom you can reach quickly in this game, which I like. It's really cool. But think of all the other people you can help that really are looking for a good place to deploy money. I just talked to a lady the other day. I was talking to her on the phone. She goes, do you think I should pull my money out of the stock market and then maybe do another deal with you? She's invested into our fund. We run a hedge fund. She's a fund investor, but she likes the theory of rhino lending and lending on a note. She likes it. Do you think I should pull my money out of the stock market? I go, I don't know, maybe. What's going on? She goes, well, there was $108,000 in there, and now there's $94,000 in there, and it seems like it's going down, and I just don't want to lose any more of my money. I mean, people are feeling this, right? And even if you say, well, just tell her not to sell, tell her to hold on, it'll always go back up, right? But understand that there's ladies that are nearing the retirement age that she's stressed out, right? The only reason she called me, she's feeling stress and anxiety about her financial future and her retirement, because the ups and downs and the volatility of some of these investments is just enough to make people sweat or not sleep at night.
Right.
And so it's like, for her, maybe it's smarter for her at her age to put her money in something that's very secure with collateral, that has a contractual rate of return with reliable monthly cash flow, and that kind of thing, where she can sleep at night. So it's cool that you can provide that opportunity to people while you also are able to grow your net worth, stack your portfolio of notes, and live a super duper passive cash flow lifestyle, right? I can go on a fishing vacation for 3 weeks. When I come back, people still made their mortgage payments, so there's money in my account.
Yeah. And none of those people making the mortgage payments are really calling you, or like the tenants, the toilets, all that stuff. That's the beautiful thing. You don't also have a voicemail full of of crappy messages.
Yeah, if your toilet leaks at your place, you definitely don't call Wells Fargo and say, hey. Okay. So I'm just saying, guys, I know it's funny too. And let me just clarify one thing, because I know we're getting to time. But let me clarify one thing. Most people think this is odd, and most people haven't heard of it, and it doesn't seem mainstream, of course, because in the business, no, people rarely, and I don't want to say never, but it's almost never, but it's rarely, I'll say never, is that people send their mortgage payment to another individual. So let me just clarify something, right? You say, I'm a mortgage note investor. It sounds odd, sounds cool, too good to be true. How come? If it's so good, I don't know about it. Okay. Well, remember we talked about the transfer letter earlier?
Yeah.
Okay, when your mortgage is transferred from one lender to the next, and I use the scenario of like Wells Fargo bank transfer to Bank of America. Well, people would be familiar with that and totally get it right away. Just a normal homeowner would go, oh, Wells Fargo bank transferred my mortgage over to Bank of America. Now I got to pay Bank of America. It all makes sense. It wouldn't be sketchy. Now, guys, I know that it would be really weird and it would seem sketchy if a homeowner got a letter and it said, hey, Wells Fargo is no longer your mortgager. Now it's Patrick Franz.
Right.
So you got to send your mortgage to Patrick every month.
Yeah.
That's sketch, right? It's so weird. And so that's not how it goes down, just to clarify that, you guys. So I use a company, and I'll give them a shout out too, because they're great. I use a company called Madison Management. Madison Management is a third-party licensed mortgage loan servicer. They service the loan.
Yeah.
And they're very inexpensive, and they're very good at what they do. And what I do is when I buy one of these mortgage loans, I immediately onboard it with Madison Management. So when the homeowner gets that transfer letter, even though I'm the person that the mortgage transferred to, the ownership of it, right?
Yeah.
They get a letter from my third-party servicing company that says, your mortgage has gone from Bank A to, it's been transferred to Madison Management Loan Servicing.
Yes. Which sounds better than Patrick Franz.
So now pay your payment every month to Madison Management Loan Servicing, not Bank A. Do you understand what I'm saying?
Yep.
And then my third-party loan servicing company, and you real estate investors are familiar with a property manager. I'm just making the third party in between correlation. But that servicing company not only sends out the monthly statements, keeps track of the UPB, the late fees, all that stuff that we don't want to do, sends out the year-end statement and all that stuff, the payoff balances. They take care of the servicing the loan. And then when the person makes the mortgage payment to them every month, they gladly turn around and deposit that mortgage payment into my account.
Awesome. Now, the $1 million question. How do we work with you? How do I sign up right now for the Note Investor University? So how do I, because honestly, this was really good. I've heard notes explained before, but this was probably the simplest, and especially from the real estate investor point of view. So this is really good stuff. So how do people get a hold of you, reach out if they want to go down this path? Because this is really good.
Yeah, and I don't know how you post this out there. You're welcome to use this and put it out there for people, but get on my calendar. If I have availability on my calendar, it's because I'm not involved in another meeting or transaction. So I'm there to talk to people. And obviously I love helping people learn this because look, there was 20 years of my life where I was an entrepreneur, no lack of hustle, always trying, couple dead ends, couple tough breaks with economies happening and so forth. But it was like, dude, I never got financial freedom, even though I was trying. Anybody relate? And so I started doing this in 2019. And guys, 5 or 6 years later, certainly financially free with all sorts of big opportunities that have opened up for me as I've grown in the industry. Being on the bank side of the fence is a pretty nice side of the fence. Let me tell you. It's called getting yourself away from just being in real estate, but you can also be in the money business too.
Yeah.
And the money business is where the money's at, right? So that's what we teach you at Note Investor University. And you can get me on my calendar link. It's Calendly, CANDLY, CALENDLY, calendly.com/the Note Mentor. Okay. So calendly.com/the Note Mentor.
Awesome.
And, yeah, get on my calendar. Let's chat. In the Note Investor University, we do this, and I'll end with this. Of course, we educate you. I think we have one of the top education systems when it comes to note investing expertise that's out in the marketplace right now. It's very well done, easy to follow. But the deliverables of the education is one thing. We really want people to start to change their lives and become financially free quickly. That's the point. And people don't want to become financially free quickly, change gears, change their lives real quickly within 36 to 48 months. Don't come seek my help because that's all I want to help people do. Okay. You get on my calendar and let's chat. See if one of our programs is right for you. But I'll tell you this, I have a program that within the first 12 months, we insure and guide and help you to raise a minimum of $150,000 of private capital.
Nice.
Okay. Minimum of that. We also help you buy a minimum of 3 mortgage notes.
Cool.
Okay. And we also ensure that you will get to a point where you're earning a minimum of $500 a month of passive cash flow. And I'm talking passive cash flow that could come in for the next 20, 25 years, but we'll get you to that point minimum. Okay. One of my students, Carlo, came in the game, and in the first 12 months, he bought like 16 notes, made 56 grand up front in acquisition fees, and then is, I think, a little above 5 grand a month passive already. Nice. So it's so possible. That depends on who you are, your drive, of course, your experience you have coming in. But yes, our program can do what it preaches to do, what it promises to do. And that is to show you a game that is definitely real estate related. So if you have real estate knowledge, even plus for you, but a game in which is on the banker side of the fence, not the active real estate investor side of the fence. Okay. And if I started going down to it, and I know we don't have enough time, but dude, we can flip notes. Okay. House flippers, we can flip notes. Okay. Hey, landlords, we can hold on to notes for cash flow. Hey, gamblers, we can buy non-performing vacant house notes, and we can try to go in there and, you can turn non-performing notes into house flips. You can turn non-performing notes and acquisitions of real estate at cheaper prices into rental properties. So it all goes together, guys. And what I teach is the money side of it, buying discounted notes that are already originated, and creative financing for your real estate portfolio. So that's what we've got to offer. Reach out to me, get on my calendar, calendly.com/the note mentor. I'd love to talk to you.
Awesome. Well, this was great stuff. Thank you so much, Patrick. And if you're listening to this, like go check that out. This is something, if you're a real estate investor, you could get into the money side, and which is what we talk about on this podcast all the time. And if you're also out there thinking like, what the heck, I have no idea where my money's going, I have no idea what's going on here, that's where you could reach out to us at simplecfo.com to make sure you know where your money's going. And then you can start the note investing, so you're not just like, what the heck, what am I doing? So that's where we want to help you. If you know how to make it, we help you keep it. And just remember to make profit a habit in your business. Patrick, thanks again for being on the podcast today.
Awesome, man. Thank you so much.
This episode of the Profit First for REI podcast is over, but there are plenty more where that came from. Are you ready to learn how David and his team can help implement the Profit First system in your business? Schedule a discovery call at simplecfo.com right now. We'll see you next time on the Profit First for REI podcast with David Richter.